All right, nothing better than some multiple choice questions to work on together. Here we go. First one, which of the following is not a prohibited service that a CPA could perform for an issuer that it is auditing as long as the service has been pre-approved by the audit committee? All right, so CPA is auditing this issuer, right? Auditing the client. So three of these they cannot do. And I'm just gonna start off with one. You can't do bookkeeping for a client you're working on, right? You're not gonna create the books and then audit your own work. That is the biggest no-no there. So definitely gonna cross that one off. One of these is explicitly mentioned that it's okay, and we'll talk about that in a second. But I want to eliminate the other ones as well. So legal services, I'm going to eliminate that as well. So that is a prohibited service. You cannot do that. You cannot give legal advice because, again, that's acting on behalf of the client. So the reasoning for why you can do the one that we will see in a second, you could make the argument here, right? You could make the argument that, like it would be a conflict of interest, but guess what? I don't make the rules. You don't make the rules. We're just here to answer the question. So, you can't tell them, oh, you should sue this person and then you audit the results of that lawsuit, right? That would be conflict of interest. And actuarial services. So this is you're generating the numbers for the clients that they're using that you would then be auditing. So again, a little bit of a conflict of interest. So, however, tax services, as long as there's no aggressive tax transactions, right? Confidential, as long as everything's public knowledge so that, anyone can come in, the IRS, a quality reviewer can come in and say, okay, they just did standard tax work. And, a lot of times this goes hand in hand. It's not like you're going to particularly be auditing your own work when it comes to the tax services. A lot of it can be objective, right? And you see all the criteria that we talked about in the lesson, right? So it's very like niche, but sometimes it does make sense. It's like, who knows you the best? Probably the auditors. So, maybe they can do the best job for your taxes as well. Now, it's a little bit of the PCAOB and SEC saying, all right, let's facilitate some work being done here. So tax services are the ones that are allowed. The others would not be allowed because those would be you acting on behalf of the client, and then you'd be auditing your own numbers. So, perfect. According to the PCAOB, each of the following statements is true with respect to the auditor's responsibility to communicate material weaknesses in internal control financial reporting. Gosh, I love that term, that phrase, except. So all of these are true except for one. Are we going to communicate all the weaknesses to the audit committee, to management, to stockholders, and communicated prior to the issuance of the auditor's report? So first off, I'd say, right here, right? We've got it right here. Who are we going to communicate these significant deficiencies and material weaknesses to? Well, it looks like we're going to communicate to both management and those charged with governance. And who are those charged with governance, right? It's going to be the audit committee part of, I'll just show you the chart over here, right? Right. The audit committee is going to be part of the board of directors in here. Here's the audit committee, right? So they are those charged with governance. All right. So yeah, it would make sense. You want to communicate it to those individuals. Management, also a great party to communicate with. Letter C definitely does stand out. Are you, as the auditor, going to write to all the stockholders and say there were material weaknesses discovered? That would be a lot. Like that just would, they're not going to, every stockholder's not going to care. What they want you to do as the auditor is to identify them, communicate the weaknesses to management and the audit committee, and then correct them. So correct them. We don't see them. You don't want to mislead stockholders. If all of a sudden you say, oh, there's a material weakness, but then that material weakness is corrected, you might have already done damage by just saying that there was, a weakness, and all of a sudden stockholders are freaking out. So it's kind of like the concept of restricting the use of a report, restricting information for, proper use. That's kind of the same line of that. But, you could also very much just memorize it per the rule. That's who you can communicate with. So I would say letter C, and then all weaknesses must be communicated prior to the issuance of the report. So yeah, you're not going to issue the report without telling them that you found some problems. So that is why we are going to eliminate letter D, leaving us with simply letter C. Awesome. Hope you are having a good time here, sticking with it. 2 more questions for you. All right. Ron Johnson serves Abco Inc., which is a public company, as its CFO. Under the SEC guidelines, Mr. Johnson's role is what? So, is Mr. Johnson, as the CFO, a committee member? Well, no, actually. We are going to take a look at the structural organizational chart of an entity. So, CEO, CFO, all of these senior management individuals, they have to be separate from the board of directors and the audit committee and all of that. So, we see here cannot be that committee member. Internal control designee. No, I mean, that's going to be someone else. I mean, the internal audit department, internal controls, that's going to be someone else within this structure. So, that's not like the CFO's job is much different than someone working in internal controls. All right. And then financial reporting oversight role. Well, we take a look here. We've got, remember that rule we talked about where you're prohibited from auditing the issuer's financial statements if you had people in financial oversight roles, such as who oversee the finances, the financial statements, the operations, right? The CEO, CFO, controller, they're part of the audit engagement team. So all of these individuals would be part of the financial oversight responsibility, the senior management, right? They would be up there. So yes, I would say that the CFO has a role in financial reporting oversight. And then member in industry, it's not what we're dealing with here, right? It's more of a vague term, so not that one, leaving us with just the letter C. Last one up. Okay. When a former partner of a registered public accounting firm who left the firm 2 years ago accepts a financial reporting oversight role, we were just talking about this, very good. The independence of the registered public accounting firm is considered impaired unless which of the following is true. All right, so how are we going to deal with this? So we cannot have this individual, right? This person who left, they can't have any relationship with that firm, right? So they left the audit firm to go work at this company. So let's see. I mean, I like to jump around. It's a good time. If they disclose the relationship, yeah, I don't care if you disclose the relationship. That's still not allowed. You can't just jump from the auditor to the client side, even if you disclose it. I mean, that's just not, that would be completely a breach of fiduciary duties in independence and all. And we look at let's go to letter A. I'm just jumping around, having a good time. Exerts only limited influence over the public accounting firm's operations. No, if you have any sort of ability to influence the audit firm, you're influencing the auditors that are auditing you. That's not allowed. That's super not allowed. So very good, crossing that one off. The former partner was employed by the registered public firm for a period of 2 years or less. Well, if we look at our rules, we've got a few items here. And it looks like former member of the audit engagement is employed by an issuer client in a financial oversight role during the 1 year preceding the beginning of audit procedures. That would impair independence. So we want the answer here, which actually you would have seen in that slide right there. If they have no remaining capital balance in the firm, right? Let's say you've got a big wig at Deloitte and they are a partner, we're a partner at Deloitte, and then they go to work for one of Deloitte's clients. Well, if they sold out of all of their partnership interest in Deloitte, meaning they have no legal authority or ability to influence Deloitte at all, then that would be allowed, right? That would be allowed. The independence would be considered impaired in all of these except for letter D. So if they have no more capital balance, right, they sold out, they don't have ability to influence Deloitte at all, then they can go work for the client and all is right with the world. That was our round of multiple choice questions. I hope you all enjoyed, as I'm sure you did. Keeping those spirits high, keeping those smiles going. Go get a nice cup of coffee and keep up the good work, everyone.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.